Let's move on. Let's talk about Brigade Group because that stock too is fairly excited. Nirupa Shankar, the joint MD at the group, is joining us to talk to us about the way forward because the FY24 pre-sales figure have been rather strong with the 6,000 crore number coming in. And the real estate sales volume were also quite substantially higher at 7.55 million square feet. But the question is, where do we go from here on? That's exactly the first question, Nirupa. This kind of growth that we have seen for the last couple of years has been nothing less of a dream for the real estate companies. But now there is that nervousness coming in. Is the best over? Is the bubble going to burst soon? What's your take?
We just want to enjoy what has just happened in the last couple of years. Of course, it's a new year, so new goals and new targets. But the real estate segment is seeing decadal highs. So all the market dynamics are good for a good growth even in the coming year. But with macroeconomic conditions, we never know where the market will turn. So as of now, we've had a very good year. The last couple of years have been very good, not just for us, for the industry as a whole, but mostly for established players with a good reputation and good products launched in good locations. I think in the coming year, we have said we are at least looking to launch another healthy pipeline of at least 10 to 12 million square feet.
12 million square feet of the pipeline that you have, but since you talk about good growth and the fact that we're at the cusp of New Year, Nirupa, help us define that good growth figure and what's the target that you've set for yourself in terms of FY25 pre-sales now?
Honestly, I can't give too much of forward guidance right now because we're in a silent period. So our operational figures were basically for the last quarter, and we are yet to have our board meetings, etc. So I'll have to get back to you post our board meetings and post the silent period on our future plans for the coming year.
Absolutely. We will get back to you on that note. But, let's talk about your footprint and where is it, at least as a strategy-wise, that you want to expand further in terms of your footprint, significantly expanded in Chennai, Hyderabad as well. Anything exciting that you're looking at for FY25?
Yeah, like I mentioned, FY25 should have some exciting new launches in Hyderabad and Chennai. We have a large project in Hyderabad that we should be launching in Q1 of FY25. So currently, most of our footprint has been in Bangalore. The last year's sales are primarily Bangalore dominant. But this year, we're hoping to have more launches in Hyderabad and Chennai. So it will give a more contribution from these other two markets as well. Our plans have always been to focus on these three markets, which we believe can be our stronghold. And we plan to go deeper into these three markets before looking at any other markets as well.
Okay, fair enough. That's a little bit more perspective as to how you're looking to expand your overall presence. But also give us a sense as to what the outlook is when it comes to, the trends that we're witnessing in terms of residential sales, this premiumization trend as well that seems to be picking up, the pricing trends as well. How are you looking at it shaping up on ground?
Like I said, the market dynamics have been pretty good. So they've been able to absorb a decent price increase. I think prior to COVID and before this whole exuberance in the market, which had happened in the last couple of years, there was a lot more staggered way in which we would sell our projects. So if just to give an example, we might do, maybe a third of it at launch time, a third during the construction, and keep some units even for post. And that way we would figure out a way to get the price increase at a decent average. Now, I think because there's an exuberance and there is a very healthy demand for products, we are able to launch at a much higher price than we normally would and do the sales at a much quicker and rapid pace as well. So a lot of the sales will happen, almost as soon as we launch a project. And we're able to add in the rate that we want. So last year, we were able to see an increase of almost 23% in our prices. And we hope that this trend will continue.
Right. And Nirupa, just want to understand in terms of the mix also. Obviously, residential is maximum in terms of our mix, right? But hospitality, that's doing well. Commercial leasing, commercial sale. How is that overall that you're seeing shaping up next couple of years? How do you see it changing in terms of a trend for the company as well?
So one thing we enjoy doing is that we are in all asset classes. I think Brigade is amongst a handful of developers in the country that build all asset classes. So typically residential has been contributes about 60 to 65% of our overall top line. And the remaining comes from our annuity income portfolio, which includes office, retail, and hospitality. We believe that this trend will continue. We expect all the segments to grow in parallel to each other, and we believe that this trend will continue. So we will continue to build more office tech parks. I think we said we will look to launch at least 6 million square feet of office. We have also mentioned earlier that we will be launching 5 hotels sometime this year. So that news has already come out into the market. So we are planning to grow all these verticals alongside the residential growth as well.
Okay, so 5 hotels, a lot in terms of the commercial property which is coming up as well. But how are you going to fund all of this, Nirupa, in terms of the balance sheet strength? Do you think you have it already, or you're looking at perhaps some sort of equity tie-up, some sort of debt increase for yourself?
So typically, most of our funding is done through internal accruals and debt. A lot of our projects are also joint developments where the landowner comes in with the land. So there's not too much of outflow for us in the initial periods, apart from what we require for construction. So we've been able to manage our cash flows in this way. As of now, there are no additional plans to raise funds as of now.
Okay, Nirupa, on that note, we let you go. Thanks so much for making time and speaking with us. So that's the view coming in from Brigade Group. They are going, of course, looking at launching fresh residential, commercial as well as hospitality properties in the coming year, and hoping that the cycle is likely to continue with a good amount of uptick on realization as well as expansion. The stock holding with a gain of around 5%.
22,150 above those levels is what it's managing to hold on to. But we're seeing media, metal, that's managing to hold on to good gains, as well as PSU banks managing to hold on to gains of more than 1%. Individual names like Industars, HPCL, SAMIL, as well as Power Grid holding on in terms of the top movers in the FNO space. But let's move on and talk about IIFL, and we are seeing that IIFL Finance has actually approved right issue of 1,272 crore rupees at 300 rupees per share. Somit is going to be joining with us to give us more details, analyzing what it actually means for existing as well as new investors. Somit, take it away.
Well, IIFL Finance Board had approved a 1,500 crore rights issue, but the company has now finalized 1,272 crore. That's the amount that they're going to raise via rights issue. The rights issue is priced at 300 rupees per share, which is at a discount of nearly 29%. The ratio is for every 9 existing shares will get 1 extra rights issue shares, and the record date for being eligible to be able to participate in this rights issue is April 23rd, which means that the last day to buy shares would be April 22nd. Now, the rights issue would open on April 30th and will remain open till May 14th. Now, if you see, if one becomes eligible for this rights issue, then the rights entitlement will be credited on their demat account on April 29th, and the last day to sell this rights entitlement would be May 1st. Now, what is a rights entitlement? Rights entitlement is a temporary credit of these shares, and investors can either keep their rights entitlement and go ahead and subscribe to this rights issue, or they have an option to sell this rights entitlement in open market on the exchanges. Now, what should an existing or an old investor do when they get this rights entitlement in the credit account? They can consider selling the rights entitlement when they get credited into their account. Or the estimated rights entitlement price is expected to be around 122 rupees. Now, assuming one has around 9 shares, they'll get 1 extra rights entitlement in their account, which if they sell at 122, it translates into a dividend per share of around 13.6 rupees per share. Now, do remember, since listing till now, IIFL Finance has not announced a dividend of more than 6 rupees. So, by selling this rights entitlement, the actual amount or actual return that a shareholder would get in terms of dividend would actually be more than double the dividend amount that IIFL Finance has given so far historically. However, if they choose to keep this RE, there's too much of hassle. They need to keep a track of payment payment dates, they need to make the payment for rights issue, and if they forget to make the payment, then the rights entitlement will be forfeited. And what should new investors do in this IIFL Finance rights issue? However, there is no trading opportunity here, given the fact that the rights entitlement ratio is not too much in favor, because you buy more new shares and get only few additional shares at a lower price. So the rights entitlement is not in favor. So if anyone tries to do an arbitrage here, they would incur a loss by buying fresh shares of IIFL Finance, as there is no arbitrage opportunity in this IIFL Finance rights issue.
If you like this video, then like, share and subscribe to ET Now.